Hey everybody, Alex here with Momentum Charting. Today we are going to be doing the first of kind of a new little experiment I'm going to be running. And yeah, just make sure you go down below, subscribe to the channel, hit the bell notification so you're going to get updated on all my videos going forward this week, next, and the entirety of this year. But what I'm going to be doing that's going to be a little bit different than before, I've kind of decided to break up my technical analysis videos. I still do plan on, for certain stocks, doing the one-off videos, but I want to kind of try to group my technical analysis and some of the stocks and indices I follow in order to sort of better, how can I say it? Yeah, well, to keep myself a little bit better organized, and to kind of get through more of the stocks and charts that I want to talk about, because I have been finding it pretty difficult to just keep up with all of the insane amount of different charts and different stocks. Trying to shoot like 15, 10 different videos in one day is pretty difficult. So I think that I'm going to have a better chance to keep myself organized and get the information out to you guys in a better way and kind of a more succinct and compact way if I do these groups. Like I plan right now, I have 11 different groups, and the first group here we're going to be talking about today is broad indices and the VIX. And then, for instance, like another group is going to be FANG stocks, and then there's going to be like tech and semiconductors. So kind of a groupings of sector, or at least some not all of the groups, not all the stocks and all the groups are going to be directly related, but kind of just put together in a way that they are at least somewhat loosely related. So there's a good chance that if somebody is interested in one of the stocks in that sector, they're probably going to be interested in the rest of the sector, so can get find use and get some useful information out of the entirety of the video. But also what I'm going to do, if you go below down in the description, you are going to see that I'm going to leave the new style of timestamps on each video, which, yeah, it's going to take a little bit more work on my part to go through and kind of dissect each video and put timestamps of where we're talking about each individual stock, each individual index. But it's going to be very helpful for you in that if you are only interested in one component of the broad picture or the sector that I'm talking about, you can just go down below to into the description and click the relevant item that you want to view, and it will take you directly to that point in the video, so you don't need to watch the whole video if you don't want to. So yeah, just let me know down below if you kind of after watching this, if you're going to enjoy this new style of video. But yeah, that's basically it for now, guys. So with that out of the way, just one quick thing I wanted to say about this is obviously the video group 1. I don't know if you can call it necessarily the most important group, but yeah, it's going to be broad stock market, the Qs, the Dow Jones, the IWM, the VIX, the Qs. So yeah, obviously broad market wise, this is kind of where it's at as far as determining like where broad indices are headed and kind of the undercurrent of broad markets. So yes, this group is going to be very important, and I will definitely try to hit this at least once a week, hopefully more. Let's see how much time these take to get through all these. I think it's going to be easier once we get through all of them once. I'm going to have trend lines drawn and stuff like that, so we can just kind of revisit the information we've been providing on past technical analysis videos and kind of just update them slowly along the way. So that's basically my plan. But what I wanted to say, guys, about the broad markets, if I have to I know sometimes I go on these rants, but it's just like if I have to watch another video or another 100 videos, as the case always is, but another video this week about a major economic catastrophe that's going to happen next week, stock market crashing, imminent stock market crash, imminent market warning signs, markets are ready to crash. I mean, it's so far beyond me, guys. I mean, if I have to watch another video about how the market is going to crash next week, I don't know. I'm gonna go crazy. To me, okay, I've kind of worked it out here right before I shot this video, and it seems like to me the guys who keep shooting these types of videos about these imminent market warnings, imminent market crashes, kind of fall into three main categories. And the first one is the kind of the perma-bear type people who, some of them are well-meaning, but they always have the same leaning, they always have the same bent look on the market. And these, to be honest, are you get the most hardcore fans, the most repeat people in the comments and watchers, because there's a big group of people out there that fall into this category that think, you know, the American economy is doomed, we're in for a big crash, or they want to see the failure of America in some cases. I have no idea exactly why that is or what their reasoning is, but you just have this hardcore, like, ultra uber bearish group of people that just continually put out this information about how they see this huge massive crash right around the corner, right next week, that's going to happen. And these videos do indeed get a lot of views, get a lot of confirmation bias in the comments about, yes, I agree, markets are done, boom, it's over, huge crash coming next week. So this is kind of the first grouping of people, is just the perma-bear channels, really popular channels, gets in many cases gets hundreds of thousands of views, millions of views, hardcore fans. A lot of people, for whatever reason, want to see the markets crash. I don't know exactly what the reasoning is for that, but you get a lot of hardcore people in this group. So that's the first kind of grouping I see of these consistent market warnings, market crash type videos coming out. The second group, to me, are a little bit more well-meaning, but still, in some respects, to me, misguided. It's the kind of the guys that are trying to take a broad macroeconomic outlook. They call them the macroeconomic tides, and trying to tie that directly to what is happening in the markets. Guys, I don't have a lot to say on this, so they're the guys that are taking, like, the consumer data, all the data put out by the government, the consumer pricing data, the inflation, the money printing, the housing market, all this stuff, and trying to shove it together and formulate an opinion on what they think that is going to mean in the market in the coming days and weeks, even years in some case. Guys, just forget my opinion on this, but just listen to, like, one of the sharpest guys you will ever find in the world, Charlie Munger, and just do quick research and on YouTube. Don't listen to me on this topic. Go to YouTube, search Charlie Munger thoughts on macroeconomic tides, and see what you turn up, see what his thoughts are on it, and you will see that he is a firm believer in you cannot predict markets using broad macroeconomic cycles. I'm going to just leave it at that. So that's the second grouping of guys that you have consistently here over, Jesus, it's the last year and change of just the markets are finished. Okay, so that's the second grouping. The third grouping, also in some respects to me, are very well-meaning, but again, so the third group is the guys kind of trying to use their technical analysis and in some cases like the Elliott wave analysis, things like that, to say that the markets are cooked next week, big collapse coming next week, tomorrow this crash starts, all this stuff that gets a bunch of views, a bunch of people watching the videos. But I don't know, the kind of technical analysis they're using, like, I don't know, there's okay, the Elliott wave stuff, okay, anybody who really is trying to use that type of stuff to trade, To me, it's just really, really hard. These guys have been trying to call the top of this wave 5 for a year and a half now. It just, it's kind of beyond me, but it's just been this long thing of trying to follow this wave 5 up. Okay, this week it's crashing, this week it's crashing. It's so, and they are wrong so often, it's almost not even worth talking about. So you've got this one group, the Elliott waves, the Elliottians. Yes, it's very interesting. I find it interesting, but I do not find it particularly useful in predicting anything, let alone where markets are headed in scope or direction. Very fun, very entertaining, very difficult to use in a trading scenario if you are trying to make money in markets in a swing trade capacity at the very least. So you've got that group, and then you've got the other group of guys that are using technical analysis, sort of their indicators, and they keep coming up with this thing like they will say like, well, markets have been going a certain amount of time. The fib retrace says we are due for a big correction. We've been going up at 45 degrees for the past year. We haven't touched the 200 moving average in a year. It's due to crash. We have this set of divergences in the MACD, this set of divergences in the RSI. Guys, all that stuff is well and good, but these types of indicators, especially on a broad scope, can continue to show this negative divergence for months and months and months and years, and all it takes is one move on that chart to reset all of those negative divergences and wipe clean all of that stuff you have been planning on working for the last year and change, trying to get markets to crash. So yeah, and that stuff about there's no written rules that we have to come back down and hit a 200 moving average within a certain time period. Okay, again, markets can remain irrational and do a lot of things for a longer period of time than you or I expect or you think is appropriate to happen. Moving averages do not guide the markets. Yes, in some cases they're certainly a helpful tool, but you can't say, okay, markets haven't touched the 200 moving average in 8 months. We're due to crash to the 200 moving average next week. Guys, it doesn't work like that. So those are the three groups of people that keep coming out with those types of videos, and I'm going to, yeah, we're over 10 minutes in here, and I really do want to get to the charts, but you're going to see basically what I'm showing here on a broad scope in all of our markets, including the VIX, including the Dow, including the Qs, are markets that are on a broad picture in strong uptrends, and most cases in a short-term perspective also in strong uptrends. So when you match those two, you match a strong long-term uptrend with strong short/medium-term uptrends that are actually in place. To me, you cannot come out with a video and saying that markets are crashing. It's completely ridiculous and it's foolish to keep doing that and keep telling people that markets are going to crash and keep them on the sidelines and keep them from participating in what right now are just these fantastic conditions, market conditions. Yes, not necessarily economic conditions. We all know the underlying problems plaguing the economy. People are hurting for jobs. Small businesses are hurting. But guys, we have to, in some respects, put all of that stuff aside and just focus on the price action, focus on the charts, look at what is in front of your face, and just instead of what you think you want to have happen in the markets, go with what you're seeing with your eyes, go with the charts, go with the price data. That's always what I try to do with my analysis of all my stocks, all broad markets. So guys, let's basically just get in here as quickly as possible and try to just see this these markets. So I'm going to start, what I'm planning on doing is just basically starting on a big picture like we always try to do, trying to see if we can see any big general trends. But you know, to me, that's never good enough. Never, never, never good enough. I always want to see a big picture, and I always want to see a shorter term swing trader's perspective, short-term momentum picture. I always want to do both because it's easy to say, well, guys, we're here in an uptrend on the Dow, buy the Dow. Yes, well, that could be a good idea, but there's been many, many periods in here where you would have gotten, if you're a short-term trader, you would have gotten wiped out in this trend here, right? Where you've gotten these big corrections, big corrections, big corrections, big corrections, huge correction, big correction. So there's been 15, 20 sizable corrections in here. So to me, I want to try to pinpoint areas here that are strong, yes, in the long term, but also strong in the short term, so you're not looking to get your positions wiped out, cleaned out, especially if you're using things like options and short-term trading ideas, stuff like that. So I always want to see a broad picture, like on a daily time frame, see if we can identify any trends, and then from there move into the shorter time periods and look at the shortest time frames and see if we can identify trends in there. So that's exactly what I'm going to be doing. So with all of that stuff out of the way, guys, looking here at the chart of the DIA, the diamonds, the Dow Jones, it looks to me basically like we've got two long-term trend lines in place. One here, touch point of April 2020, one here on May 14th, 2020, and then another touch point here in October 2020. This is the least relevant trend line to me here, just because we have not touched it since 2020. The more current trend line that's in place here is touch points here in November 2020, then again here in February 2nd, 21, March 5th, 21, and then it's got two more really nice touch points here, one on June 18th, 2021, and then here again July 19th, 2021. So to me, this is the more relevant of the two trend lines. At some point in time, very likely that this secondary trend line is going to come into play. We don't know when that's going to happen, but just kind of have it in our back pocket to watch. So to me, this is the most important kind of long-term trend line, this one working right here. So broad macro picture, very, very bullish still here on the Dow. Still, price is still working up nicely, showing no signs of stopping. We haven't even gotten close to this 125 EMA here. That's still pushing up nicely to the upside. Dynamic trend, beautiful, broadening, still pushing to the upside. No signs of slowing down, no signs of prices going into this zone, breaking the EMA. None of those stuff's happening yet. So macro picture, Dow, very strong. Let's now try to look at the kind of micro, midterm, short-term picture, see if we can see. Actually, before we do that, I did also want to show on the daily. Let's just open the panel up so we can see the dynamic RSI here, which we always like to look at. And you can see here, guys, alignment of the RSI here, very, very strong still. Are we overbought on the RSI? I don't know. There's been areas over here where we hit 75. In September 2020, we hit 75. Before pulling back, June 9th, 2020, we hit 75. And then this period here in March, we hit 75. And then here we hit 77. But interestingly enough, guys, you just want to be, you know, again, really, really careful. Even when you do reach these areas, there's likely to be, yes, a very short-term pullback at a minimum, but these are really, really strong areas of operational RSI, and they can and do oftentimes quickly reverse to the upside, and you get these big, big whipsaws back to the upside. So just because you've got an RSI, just, you know, I don't know what you've heard about your technical analysis, but a lot of guys think, oh, okay, RSI 80, overbought, time to sell. Guys, that is a very, very bad idea, believe me. So there's a lot of different things you want to be watching in here, and yes, potentially overbought RSI is one of them, but again, you want to use it rationally, and just you also want to be very careful for these whipsaws back to the upside where prices continue just strongly back above the prices where you thought they were too high, and then continue going back to the upside in a very strong position. So where are we at today? We're at 65, so we're not even we haven't even really gotten close yet to that area that seems to be the kind of slash quote overbought area that we've seen the past year and change. And is it possible to go above 75? Of course, happened in the past. I mean, back here in 2017 on these big runs, look, we hit areas RSI 73, here 79, pulled back, came up 89, 92, and so kind of 2017 to me kind of encapsulate areas of where we kept getting this really big bullish area of RSI extremes, pullbacks, and then just kept going higher and higher and higher. So guys, be really, really careful when you are trying to use just strictly RSI alone as a judgment of when you should buy or sell markets. To me, that is a very, very poor idea and a very, very poor trading plan. But being that as it is, we've got this RSI, to me, that's still, even on this current cycle here, if you want to call it that, still has a ways to go. We're sitting here only at, what, 65 or so on the RSI. So still have a lot of way to potentially go here. This trend looks fine to me, still working up to the upside nicely. Again, couple that with the macro bullish picture on the Dow. Definitely long term, I see no reason to sell right now. I'm seeing only positive things. And then let's dive in here. I always do want to show the shorter term to you guys as well. What do things look like on a short term? Because we do want to be aware that the short term price action, short term indicators do drive the long term. So we see it in the happening. What we see developing in the short term will be developing eventually in the long term, and can be a sort of like a canary in the coal mine, so to speak, to see what's potentially happening on a longer term chart if we can identify some really negative things happening on a short term. But is what we're seeing right now in a very short term time frame negative? I'm seeing a dynamic RSI here. Dynamic trend line that is still pushing up strongly and has been for many, many months. You can see this blue over the green line, the dynamic RSI, the dynamic trend line over the 250 EMA. Strength of our underlying trend still very strong. Okay, here we did have this little period here between about July and by the way, I'm here on a 30-minute chart inside of TradingView. If you want to do this on your own charting software, I'll be last for about a week here between July 27th and August 5th. We were in this kind of sideways, ranging downward sloping channel, but guys, we have now officially broken that to the outside. I've got these touch points here around August 5th at 9:30, another touch point here August 9th at 7:30, and then another one August 10th at 6:30, and you can see this just really beautiful, nice upward moving trend line, and broke out here on August 10th, and appears we are trying to break out to the upside of this even horizontal trend line here that's been established for the last couple days of trading. But guys, there is, even on a swing trader's perspective, short-term trader's perspective, there is absolutely zero reason to be bearish, even in the shortest term time frame. I'm a buyer right now of the Dow. I see no reason to have any panic, any fear in these markets until this 30-minute trend line right here is breached and broken to the downside. Okay? Very, very clear, very simple. I have no fear, no reasons for wanting to be short this market wanting to exit this market, wanting to not be long. I'm a buyer of everything Dow, everything diamonds right now. Guys, this trend is strong. You are in a macro trend that I showed you on a daily time frame, extremely strong. And now we are also here on a midterm trend that appears to be developing. Short-term, midterm, 30-minute uptrend that is just I like the shape, I like the texture of this trend line. I like the way this broke out, retest, and start just pushing up nicely to the upside. I like everything about this. I want to follow this trend to the upside and see where it takes us. Again, no fears of exiting this market, panicking until this upward sloping trend line is broken to the downside. Guys, let's move on to the next chart. We're 20 plus minutes in here. I definitely want to hit on all of our other instruments as well here. Let's go to the Qs. Let's hit the Qs here, and just broad picture again. Yeah, you can see here I've got pretty much of one main trend line to me that looks to be our dominant trend on the daily. Touch points here in June, touch points here in June, late June 2020, again here September 2020, November 2nd 2020, and then more recently this year 5th to the 8th of March 2021, and then a couple touch points here in mid-May of this year. This to me is the dominant trend on a daily time frame on the Qs, and we are just operating here in zones of really nice RSI. Anything, guys, that is just has RSI fluctuating in these zones here above 58, 60 area, fluctuating in these zones here is just going to continue to bring prices on the Qs higher and higher and higher, okay? Just like we had happen back here from November 2020 to January 2021. You can see the kind of same thing, fluctuating RSI in these levels where the market just continued to expand. Never really a worry about correction in markets till we did get this dip down below in February, and then we had this correction. So with that being said, just move this over a little bit so we can just kind of see what's happening here. Whipsawing back and forth in these zones to me is no worry of bearishness. To me, that's only showing bullishness. Even if the very shortest term daily is pushing slightly down, that can reverse at any moment. So that's the RSI. Let's look at the trend here. Like I was showing on our macro trend, still this really bullish line of support that's been in place since mid-2020. But as you know, that's not good enough for me. I do want to dig in here to our shorter term time frame, see what we can see developing here on a shorter term picture. And to me, guys, very evident what is happening here on a short-term time frame / mid-term time frame. We've got this channel that's developed here, okay, from July 21. Set this trend line, and then all I did was I took this trend line here, cloned it, and put it above here. So what looks like to me, guys, is we've got a macro bullish picture. Couple that again with a micro bullish picture. It looks to me like prices are trying to work nicely in these zones. We do, looks to me like, have some upside room here, possibly above up to the 373, 374 area before maybe expecting a big pullback. But everything I'm seeing here on the Qs, guys, bullish macro, bullish midterm, bullish micro, working in this 30-minute trend here to the upside. So let's get out of the Qs here and let's go to the SPY. I want to show you guys the chart of the SPY here. Broad picture, daily time frame. The the most relevant daily time frame to me here. This one, I don't know how much relevance there are. I think I've got to actually throw in this other trend line here, which looks to me to be a little bit more relevant here, starting in May, this low in May 12th, and then again hit in May 19th. So we've got two longer term bullish trend lines supporting on the daily. We've got this dynamic trend still pushing to the upside. The formation very strong, the blue above the green, the dynamic trend well above the 250 EMA. Let's erase that. So macro, very, very bullish, supported by two trend lines here on a daily time frame. But as you know, that is not going to be good enough for me. Is there any way we can take this? Yeah, this looks like a very relevant trend line to me here. Again, what happens if we clone that? Does that make any sense to do here? Maybe. I do like to clone that and kind of put it at our touch point here high on April 16th. So to me, yeah, looks like on a daily time frame, just judging by this clone trend line, yeah, possibly zones here up maybe 450, this area up here, possibly due for a correction in the short term, but here we're sitting at 443. I'm not seeing a top of a channel developing, anything like that yet. Bullish pressure long-term, bullish pressure macro. Let's look here at the short term, which we do need to take into consideration. And you can see here, guys, what did look to be happening here between the time period of around July 23rd and before we broke out here on August 5th, so a time period of about 2 weeks. There's no question to me we were operating in this kind of choppy, sideways, noisy channel. But we did break out here, guys, on August 6th. And if you look here, let's see if we can dig in here, guys. On our 30-minute time frame, we just have this really, really beautiful upward moving trend line here on a 30-minute time frame. Again, to me, guys, no fear, zero fear in these markets until one of two things happening. Yes, possibly we reach the top of this channel around the 450. 450, obviously a very strong round number, maybe a magnetic area in the market. It looks to me like markets are really considering pulling up to these areas. Now, I don't know if they're going to continue on this current trajectory and just hit this by the middle of the month. Probably not. Yeah, that 450 number, I think, is going to be a really, really magnetic number for markets. And you can see kind of trying to pull up into these areas. So that would be kind of like definitely a signal, yes, top of channel. And to me, it's kind of interesting that top of markets are kind of headed there on that really strong round number. It appears to me that would be number one place for me, definitely to consider profit taking, definitely to consider at least a short-term correction in the works. That would be scenario number one. Scenario number two, obviously, is a breach to the downside of this beautiful short-term upside trajectory trend line on the 30-minute on our chart of the SPY. Guys, I hope that's very clear what I think is going to happen, where our supports are at, long-term SPY, Qs, Dow. Okay, so we do have two more charts that we want to hit here. Let's do that before we kind of run out of oxygen here. Been going here for a while. Let's look quickly at our chart of the IWM, the Russell 2000. I definitely don't want to start on a 30-minute chart. Let's break out here to the daily chart. Very, very constructive, very interesting chart here on the Russell 2000, small caps. Guys, we had just this massive run up from November 2020 to March of this year, and obviously to me what's happening right now is IWM, after this huge run up in small caps, we need to take some time and we need to consolidate and need to take the IWMs just need some time to breathe here a little bit and just think about what's happening. So to me, nothing really that interesting happening in IWM. I see this daily line of support here with plenty of touch points and very, very well respected. Even July of this year, tried to break below it, quickly jumped back to the upside. And it looks to me like we've kind of got this triangle developing here. So to me, until this breaks in either of one of these directions, a decision is made. And yes, we can potentially use the chart of IWM when it makes a decision on which direction to go, to kind of think of that as a potential broad landscape picture of where it may pull other markets as well, but that has not yet happened. What we kind of want to look at, to me, here on the IWM, I believe that within this channel you're going to have some up and down trends, and to me, kind of when we're moving up in the IWM, that is going to buoy markets, and when you're moving down, that is a potential time for consolidation in markets. So where are we at right now? Pretty clear to me here, guys. We are in an uptrend. Potentially, looks to me, this is a kind of slow roller, slow mover here. Maybe to the early October. Would that correspond with a big market sell-off? Maybe. Or would that just constitute a time in markets where you kind of move sideways and consolidated? We'll have to watch for that. But again, to me, guys, here, IWM, Qs, SPY, Nasdaq, diamonds, Dow, everything short-term, long-term, the trend's bullish, buoyed by this IWM, which appears to be having a daily and short-term bullish trend in place, right? Even though with this, obviously, in a period of consolidation, we are in a upward moving trajectory right now. You can very clearly see here on the daily. I'll even zoom here. Why not? I wasn't planning on doing it here on the 30-minute, but you can see almost to perfection this 30-minute trend, how that matches up here, just slowly pushing to the upside in IWM. So I believe that markets are going to be supported definitely over the next month and change by this trend in the IWM pushing slowly to the upside. So last 40 minutes in here. Guys, thank you so much for hanging with me. Let's just look at the chart of the VIX, see where we're at. And most of you are probably very well aware a struggling VIX or a downward pointing VIX means markets are very strong. When you have increased volatility in markets, that is going to lead to potential large corrections and large bad things happening in broad markets. Guys, what are we looking at here on the VIX? I'm here on the daily. What do you see? I see exactly what you see, which is a long-term bearish channel that's developed here since early this year and increasing in strength here to the downside. This channel here, I just took the tops of these wicks here, just clone this, and that's where I put this. This is, to me, what looks like is happening in the VIX right now. You just have this ugly, ugly, ugly channel to the downside in the VIX right now, which obviously very, very good for markets, right? Yeah, so this looks bad to me on the VIX. We can go back here to 2017. This was kind of the point where I was showing these really strong RSI readings. We can see here market bottoms at around 9, but guys, don't listen to the people who are just telling you, well, when VIX is low, it means it's time to for a big market correction. That is so far from the truth. You guys can see here, VIX can operate at these just depressed levels for months and months and months, weeks and years at a time. So guys, just because someone tells you the VIX is at 10, it's due to blast off to the upside. Throw all that garbage away. You can see here VIX operating in this period between 9 and 15 for a long time, many months at a time. And it looks to me like we are just, anyone that tells you right now VIX is at really low levels, we need to correct. Guys, we are just now entering this area around 15 and potentially entering these areas of 2017. Not even close to these areas down here where we operated for months and years in the 12 to 9 area. So that's kind of what it looks like to me is developing here on the VIX. Maybe, yeah, you can say this trend line somewhat supporting here at around 15. But what I'm seeing is a long-term, very bearish, very ugly down-sloping channel. This 125 EMA pushing to the downside, the 200 moving average pushing to the downside, this bearish channel that's developed. To me, that represents a good long-term opportunity for market strength, not market weakness. Guys, if you made it to this point in the video, thank you so much for watching. Please, again, make sure you do a couple things. First of all, for all the noise you're hearing, all the markets are crashing, markets are ready to collapse. Next week, huge crash coming in the market. You may or may not do it, but if you enjoyed the channel, I would appreciate it. Point anybody who thinks the markets are ready to crash to this exact video. Have them watch through. Have them look at the actual price evidence, the actual trend evidence that I'm seeing, that you're seeing, that you are now hopefully seeing, that is supporting continued price expansion, continued price acceleration in markets, not markets that are on the precipice, on the brink of collapse. Okay, so do that for me. Point anyone out who is doubting strength in the markets. Point them to this video and take a look at the evidence, actual evidence, not divergent evidence, not broad macroeconomic tides evidence, not top of wave fifth Elliott wave evidence, actual evidence of price action that's currently happening in the markets. Point them to this video. That would be awesome. Secondly, make sure, if you have not yet done so, go down below, subscribe to the channel. You are not going to want to miss any update. I'm going to try to introduce those next 10 groups over the next 10 or so days. So yeah, and the only way to ensure you do not miss any of these videos is going to be to subscribe to the channel, hit the bell notification, and again, let me know if you like the new format. It's going to take me some time to go through this video and kind of pinpoint exactly where the start of each of these individual instruments are. So I'm going to have, again, if you moving forward, if you want to just skip to a certain part of the video, you can do that down below with the links in the description that pinpoint each starting point in the video for each individual instruments. Guys, thank you so much for watching the video. Very much appreciate each and every one of you. Thank you for watching. I will talk to everybody again soon. See you again in the next update video. Bye for now.